we are in the final trading day of 2023, and what a phenomenal year it has been for Indian markets. We may not see 2000 on Nifty, but I think in retrospect, I think bulls will rather celebrate the kind of movement and the kind of strength the market had showed, since last Wednesday shakeout, isn't it?
Yeah, I think good morning, Swash. I think markets are definitely looking quite positive and encouraging, largely because FII flows have actually started coming back in a significant way. More importantly, I think our sense is that the third quarter numbers, which are expected now very soon, by the first week of January, you'll see a good kind of performance from most of the larger corporates, and specifically, from sectors like automobiles, auto components, capital goods, real estate, cement. So I think, markets are now looking forward for a good earnings trajectory for the second half of this fiscal year. And more importantly, everybody is expecting that in the new year, once Jan 22, the new, Prime Minister Modi inaugurates the Ram Mandir, we could possibly hear some electoral campaign being announced by the government. I think clearly a lot of flows are expected, from January as allocations get announced in the beginning of the year. And with now 3 rate cuts announced by the Fed governor, I think everybody is looking at the fact that a lot of foreign money would now come in emerging markets like India, and that would actually facilitate the sentiment as well as the growth momentum in the Indian stock. So I think it's going to be a selective stock picking market, but I think broadly it's a market where I think any decline should be used as an opportunity to accumulate good quality stocks in your portfolio.
Now, Mohit, you are a registered investment advisor. But I think one of the best advice that came in 2023 was from from PM Modi, who advised buying PSU stocks back in August. And since then the PSU index has in fact rallied by about 37% or so. But on a more serious note, can this rally that we saw, the phenomenal returns that we saw in PSU stocks, can this continue stepping into 2024?
Hi Suyash, morning, and I think it's a lovely last day of the year. So look, I think just to answer you, you cannot take any word which comes out of the man lightly, and I think markets have taken it very, very positively and very strongly. PSUs have completely turned around, and if you see, I think banking is one sector which is totally evident in front of our eyes, the way transformation has happened, the way NPA cycle has turned around, the way bank balance sheets are looking now much healthier, much stronger, much cleaner, right? So I think on both levels, the gross NPA and the net NPAs, if you see from where we were in 2013 to where we are in 2022, it's taken us a long, painful cycle to actually get the net NPAs down below 1% at an aggregate level, and which is a transformative thing in a country like India, where a lot of new capital is borrowed every single day, and a lot of new funds are being raised, right? So I think banking is one sector where we can continue to be bullish. In fact, the overall PSU pack, as you rightly said, if the indications are correct, and if the government is coming back to power, the continuity of policies and the way government capex has been, I think PSU is one sector which will catch up with their private sector peers. In fact, I'll not be surprised if they come at par or almost near the private sector peers in terms of valuations. So my sense is, I think we should stay long on this trend, which is both the PSU banks and the PSU stocks.
All right. Avinash, coming to you. Now, we for sure have performed, Indian markets have performed, but 2023 overall has been a great year for global equities. Let's take S&P 500 for instance, that's a proxy for US stocks. Now, that has outperformed Nifty year to date. It's up somewhere around 25%, whereas Nifty is up about 20% or so. But, this is at a time or in a year in which, the country saw the worst banking crisis since Great Depression. Interest rates are at a decadal high. And, all through the year, we have been talking about US potentially slipping into recession. So, do you think that this rally that we saw in the US market, is that a big suspectful?
No, I think clearly, markets started the year with a lot of doubt and suspicion, Suresh. But I think as the markets went ahead, I think one thing is very clear that all across the globe, I think if you look at S&P 500, you look at the Nasdaq, I think very strong performances. And I think this has been supported by good corporate performances, from corporates in the US. And I think despite high interest rates, this performance has been quite strong. I think now the Fed governor mentioning that inflation is now within control, although it's still yet to come down to their comfort level of 2%. My sense is that once interest cuts happen from say April, May onwards, the markets would definitely get better. In fact, the cost of financing would also come down. So I think this rally is not suspectful. See, the markets always look at the future and don't look at the past. So I think the markets are now discounting better days ahead, and I think probably that could be a big sentimental factor at least for the near term. I think the narrative has started playing out. You will probably see concrete data points, from April, May onwards, which would give us a clear indication that the US economy is now back healthy and strong. And that is the reason I would not be surprised that we could see continued rally happening in the US markets and obviously in emerging markets like India.
All right, now Mohit, coming to you now. In 2023, we saw something very interesting, a dash for cash playing out, whereas where listed companies have raised nearly 50,000 crores through fundraising, which is, by the way, a six-fold jump compared to the previous year. But, private capex, that has still been lagging. Why do you think that is the case, and can we expect it to pick up come 2024?
Yeah, Shuyash, I think the year has been magnificent in terms of new fundraise. Look, honestly, I think around 240 odd IPOs during the year 2023, which is kind of a record number. And though in terms of gross mobilization by the IPOs, I think the amount is a little lesser than what we raised in 2022, but the number of IPOs I think is higher this year, right? So look, my sense is basically in terms of new fundraise, given the way momentum is and given the way everything, the positive environment around us, we will continue to see a lot of new fundraise happening. I just lost your question, Shuesh. What exactly was your question?
My question was that we have seen good bit of fundraising this year, which is by the way, a six-fold surge compared to the previous year. But private capex has been sluggish. So why
Right,
is that
sorry.
the case, and can that perhaps pick up in 2024?
Look, I think yes, I've mentioned in your show before that till now, whatever we have seen has all been fueled by government capex, which is public capex. Government has been fueling the infra growth of this country. Government has been pumping in a lot of money on railways, water networks, power. So I think it's all fueled by government thus far. But my sense is if you see corporate balance sheets, the leverage on the corporate balance sheets is at an all-time low. If you see the gross depreciation blocks on the new on the balance sheets, the new formation is actually very low, which means that the corporate balance sheets they haven't been any new private capex and they aren't leveraged also, which means they haven't raised as much debt as they were raising before, right? So my sense is all this should turn around post the elections. Once you have a clear mandate to this government, then perhaps the continuity and the stability factor kicks in, and it's been a long overdue cycle. The corporate balance sheets are extremely healthy, and we should see a credit boom, and we should see a cycle of a private capex happening in this country. It's a matter of time. I think I'll kick in.
Now, Mr. Gorakshakar, any particular sector or theme that surprised you this year, both positively or negatively?
No, I think positively, I think clearly, I think the cement sector, the building product sector, and obviously, to a large extent, I think even the real estate sector. I think when we started the year, nobody could have imagined the kind of growth, kind of momentum in all these sectors. I think building product sector and cement sector has been largely been driven by the boom in affordable housing, in the real estate activity, and real estate as a sector has done remarkably well. In fact, my sense is that this has one sector which has emerged after a very long period of bear market for the last 10 years, and not only the bigger players like DLF or Realty, but even smaller players like Anantraj. Typically, companies which are focused in the Mumbai metro, the Gurgaon market, specifically in the tier 1, tier 2 kind of cities, have done remarkably well. And I think, this growth momentum will continue considering the fact that even as of now, we've been talking to a lot of real estate companies, a lot of, cement companies. The mood in the market is very optimistic. And at least the third quarter is going to be pretty strong. Our sense is this rally will continue for the next at least 6 to 12 months ahead.
Mohit, same question for you. Anything that surprised you on both positive or negative side in 2023?
Look on the positive side, I think there were surprises galore, which is how the overall market has rallied, how the IPO boom has happened. I think these are all positive surprises. My sense is the biggest positive surprise to me has happened in the month of December with the FIIs returning to the market, almost 57,000 crore of buying in the market. That's a big surprise for me. And the way US yields have reversed from a 5% high to almost like 3.8, 3.7% now. I think these were very quick and prompt reversals in the market trends,
Hmm.
and which has actually hugely positively surprised me. Negatively surprised, honestly, I've been negatively surprised with in terms of the geopolitical escalations and the longevity of those escalations. I was always hoping that even if that escalation happens, it would be like a month or a at best a fortnight kind of a scenario, but both the geopolitical tensions have prolonged a long bit, and which still keeps markets on tiptoes. To be
Hmm.
very honest, I think there is one eye always on those two tensions which are happening around, because anytime anything flares up, I think can be a negative trigger for the market. But otherwise, yes, I think it's all been hunky dory, and the markets have really cheered all the way along. It's the eighth consecutive year of markets giving you positive returns, and which is a record of a sort. And I hope we continue that in ninth year as well.